What up, everybody? Welcome to another fruitful class here at BTSMC. So today we have a lot to talk about. Last week was FOMC week. There's a ton of gems we could pull out of price action from last week. So we're gonna go over some of those gems. It's gonna help you with your entries. It's gonna help you with your picking the right PD arrays and everything. Like I got a lot to talk about. I'm excited to get into it. And this week is unemployment week. Y'all know, man. NFP week is the biggest week every month of the stock market. So there's a lot of movement that's going to be coming into the market. It's also the start of a new month. So you should expect a ton of action. January is really tough for a lot of traders. We just consolidated the entire month, but I think we're probably going to move out of that range in February, most likely this week, low key. Most likely this week we'll leave that range. I hope so, right? We can only pray. But with that being said, let's go ahead and get into the gems from last week before we take it to the upcoming week. And then in the middle of class, I want to say a little bit about the order blocks quiz that I put out. And if you're watching this on YouTube and you want to take part of like different quizzes and chart debates and stuff, click the link in the description because that's the link to the free community where all of that transpires. So with that being said, if you got to the chart right now and you looked at it, where would you have price going? Because for me, at this point, when I got to the chart and I seen this, I automatically know price to come to this yellow line, right? Which is sell side liquidity, which is and I gotta keep in mind, I got a lot of new traders in here that they might not know. So liquidity altogether is basically different points in the market where there's like a pool of stop losses. And so you'll see a pool of stop losses at any given like pivot low, like for example, price right here, it went up and went down, made a pivot point, right? So automatically there's a lot of stop losses at these lows. And that's because think about it, when you get into calls or you get into buys on futures, where do you put your stop loss? Probably at the most recent low. So there's a lot of stop losses there, but there's also a lot of stop losses under these lows because this is the lowest point of that range. And so when I seen this, I'm like, okay, it's very clear price is coming for these lows because it traded past this fair value gap. And there's nothing else that would stop it to getting to these lows. So mind you, I'm getting this basis from the hourly chart. Understand? From the hourly chart. So if I'm getting my base from the hourly chart, I know where price is going. When I trade the 1 minute chart or when I enter my plays on a 15-second chart and stuff like that, I automatically have a direction. I'm favored to the downside. Right now, this is a futures trade, but anything we talk about in this class or in any class applies to every market. So mind you, this is the NASDAQ, what I'm about to demonstrate on. The whole class I'm demonstrating on the NASDAQ. If you trade options, you would just do this exact same thing on QQQ. I trade options as well. So sometimes I'll be in shorts on the NASDAQ and I'll be in puts on the QQQ because it's the exact same thing. They move simultaneously. There's no difference. Like if NASDAQ goes down, QQQ goes down. Every second of the day, they're directly correlated. They're not different. All right, so what I'm saying here is the futures version of what you will be doing on options if you're an option trader. I just want y'all to know that. And by the way, while I'm on that topic, I do suggest that options people, if you trade QQQ or if you trade SPY, you should chart on futures charts because futures charts have more information for you and they are directly correlated. So once again, I would literally be looking at a futures chart, going on my phone, typing in QQQ on my app and taking puts based on what I'm looking at on NQ. And for the S&P 500, I'll be looking at ES. Okay, ES is futures. Now, a fair warning is if you have TradingView, you need to pay about $10 a month for real-time data. So don't miss that detail because otherwise your NASDAQ charts and your ES charts have a lag, a 10-minute lag, and I don't want you to get caught up like that. So if you pay about $10 a month for real-time data, I definitely suggest trading options while charting futures. All right, now let's keep it going. So once again, I have a basis right now, like, okay, price is gonna go down here. And here's an amazing, this is a great example for y'all actually on that topic. Like, I'm gonna show y'all why I do suggest charting on futures and trading options. All right, I can see in the top right, it might look like I have a lag. I hope that my computer's not lagging too much for y'all, but we're gonna push through that. All right, so yellow line is the direction. Notice this is an 8 o'clock hourly candle. What time does options really open for real? 9:30 a.m. New York time, Eastern Standard Time. All right, so if I'm on the 1 minute now and I'm looking at I'm looking at this range, and price is starting to push up, and it's pushing up with a fair value gap. That's what we like to see when we leave a consolidation. And I just know that there's a deeper retracement coming. So even though I know where price is going down, yes. Does that mean I just FOMO into the play? Like, let me get short? No, I still need a valid entry. And so when I get to the chart, personally, I literally got to the chart and I seen this consolidation. I'm like, let me just stay patient. And if price would have broken to the downside, which favors my higher time frame direction, then I would just go short. But since price broke to the upside, what I know is this is an AMD setup. And I actually posted about an AMD setup recently on social media, which is basically when price accumulates, which is consolidation, right? And then what they do is they'll manipulate one way. I definitely have the lag today, people, unfortunately. They'll manipulate one way and then distribute the opposite way. So this upward move will be a manipulation. So it's like, dang, how do I know like whether to trust the breakout or not? I just told you, get your direction from that higher time frame. We already went to the hourly. Don't forget, we just came from the hourly and it told us we're going down. Because once price traded past this hourly fair value gap, we're looking for this sell side liquidity, the lows at this pivot point. Okay, so on the 1 minute time frame now, when I notice this push up, I'm thinking, okay, I'm about to witness some manipulation. I'm going to witness a manipulation leg. And so what I do typically is I try to draw a dealing range. Now, what is a dealing range? What I'm going to do here is I'm going to take my Fibonacci retracement tool, right, which exists up here in TradingView, Fibonacci retracement. I'm going to go from the swing high. I went to the 5 minute time frame for this because it looked the cleanest. All right, that's why I went to the 5 minute time frame. It looked the cleanest. All right, so I'm gonna take my fib tool from the swing high to the swing low, right here, and then I'm looking for entries in a premium. What does it mean to be in a premium? In a premium, I'm looking for entries in the upper 50% of my range. So you see where it says 0.5, right? That means anything above the 0.5 is where I'm looking for entries, but I'm not just getting in anywhere up there. I need a PD array to get in. And some of you might have not heard that terminology. Yo, what is a PD array? PD array, to make it really short and simple, it stands for premium discount array. Premium discount array, what is that? These are areas on the chart that price tends to tap into to reject or bounce on. So for example, this gray area is a fair value gap. That is an example of a PD array. So price would most likely tap into this to send us lower. So I'm looking for fair value gaps in premium. That's going to be a concept that we're going to continue to look at going forward in these demonstrations. So I want y'all to remember that. So to recap really quickly, hourly direction told us where we're going. Don't just FOMO into your plays. Get a legitimate entry. When we had that consolidation on the 1 minute, because the hourly told me we're going lower, I would have trusted a downside break. But we didn't get that. We got an upside break. So now automatically I'm thinking, okay, this is an AMD setup. We're accumulating so we can manipulate and distribute. Where are we manipulating at? Where is the manipulation going to occur? It's going to occur at this premium inefficiency, at this premium fair value gap. And because of time purposes, I can't go through what a fair value gap is if you've never heard of it just yet. I may go over that after the recording. All right, so if y'all still have that question after the recording, ask me. I'll break it down right after the recording. But you're gonna see how nice they are for your trading. So look at this 5 minute fair value gap. I'm waiting for the reaction around the 50% of it. So let's see how that play out. And my mentees know why we're looking for the reaction at the 50% of it, because sometimes we want the reaction at the upper half, sometimes we want it at the lower half, sometimes we want it right around the 50. And so what I tend to do when I teach my mentees is I talk about the specifics as to where in your fair value gap you're looking for the reaction. On this example, we would be looking for it right around the 50% mark. So even this, you're about to watch right now, because I had to stay patient on this when this happened in real life. So you see price starting to reject the fair value gap at first, and you may think like, oh shoot, like, did I miss my entry? And let me tell you how I would have handled that because it happens. Like sometimes, we don't always get it exactly right. Sometimes it rejects where you didn't expect it to. So for me, the only how I would have actually gone short personally is by confirmation through invalidation. What does that mean? This is a bullish fair value gap. This is something that price tends to use when we're bullish. And so for me, I'm like, okay, I'm gonna let all the bull cases die before I get involved. So if this was the official rejection, I would have waited for price to close under this, then I would go short. But you'll see price ends up using it, which keeps me bullish for now. I'm like, okay, so price is still moving bullishly. Let's see if I can get the entry that I want. All right. And so, price consolidates a little bit and then it starts pushing up. Okay. So now that we in my point of interest, we're in my POI, my point of interest. Somebody in the chat who's been here with me for a while, if it's a 5-minute fair value gap, what time frame do we tend to use to confirm our trade? If it's a 5-minute fair value gap, what time frame do we? So they coming in now, right? So y'all see the chat, everybody saying 30 second, 30 second, 30 second. I appreciate y'all. So what you need to do to look for to confirm your trade with, you will be looking at the 30 second, not quite HRH, it'll be the 30 second. The 1 minute is not terrible, but like 30 second is a better confirmation time frame for the 5. So let's go to the 30 second and see what happens here. And what are you looking for? I just told you guys about confirmation through invalidation. So what I would want to see is bull cases on the 30 second get invalidated. That's one thing I may look for. I may also look for the creation of bearish fair value gap. So you're going to see this. This is a bullish fair value gap. If we're bullish, this will work. Let's keep trading simple. It's an if-then statement. If we're bullish, this is expected to work, specifically the upper half. I'm gonna be real with y'all. Specifically, the upper half is expected to work. So I'm on the 30 second. This is gonna tell me all I need to know. All right, boom. All right. So off the rip, when I seen this in the market, I'm like, yeah, I'm in there. And that was my entry where the yellow line is at. And you'll see if this thing could get out my way. My fault, Zoom was in the way. So you'll see right here that this is what I had put in the chat that morning. So you see my entry here at 21, 611.50. Just going short right there off the same. Y'all see this blue area was the fair value gap we're just talking about. I look for confirmation and then I get in the trade. So this is my entry personally, and that's why I got in the trade, everybody, because we rejected the POI. The 30 second made a huge red candle disrespecting my bull case. Beautiful. That's confirmation through invalidation. And so I get in the trade at the yellow line. And at this point, where's my stop loss? Well, my stop loss is if price were to disrespect this bullish fair value gap. Like, you mean, what do you mean? It just disrespected it. What I mean is, technically, price could use it on the other side, just so y'all know. So if price would have invalidated the whole thing, I would have just gotten out because I would know, okay, never mind. Like, I'm just wrong. Like, we could be wrong too. So that's my stop loss based on that. But obviously, price just dropped the heck off, So, really solid trade there. And now it's like, dang, where do I take profits? So maybe previously you may have learned like, yo, just take profits just because you up. You know what I mean? We just up, so take profits. Like, nah, it's a little more of a science to that. Like, you definitely want to have legitimate targets. I already told you. We base this trade off of the 1 hour. So I'm looking for them 1 hour lows. You feel what I'm saying? So I'm looking to see if price could come to this 1 hour low. And anytime price gets close to my targets, what I'm doing really is I'm watching to see how we're handling PD arrays by my liquidity target. So I'm looking for that 1 hour low right here. So Elijah, you put a thinking fit. Maybe you forgot where it was. So I'll just show you real quick. If you remember on the hourly time frame, before we looked at, before the market even opened, that was the target we had. This low, right? You could say the pivot low. I just knew that it was going to tap into this fair value gap, to be honest. So because there's an hourly fair value gap, that's why my target was there. But you could have taken profits at this internal low right there, And so So something else I was gonna say is I want y'all to pay attention to time real quick. So this is a point I was trying to develop earlier. Peep this, y'all. Peep this, peep this, peep this. What time is this candle? Let me circle it. What time is that candle? Look at it. 9:30, ain't it? 9:30. That's facts, Tiff. We getting the source today for real, Tiff. That's a fact. I hope they listening. That's a 9:30 candle. And so, you got to picture options traders. Options traders just get into the charts and you're like, dang, price just dropping. They don't know why. They got y'all see what I'm talking about? Why I suggest you chart on futures and trade options because I'm looking at a futures chart, I'm already knowing what price is doing. I'm knowing where it's going. I know what PD rate we just rejected. I know what the order flow is looking like. So I know where we going. So yeah, options just open up at 9:30 and start dropping. You're like, oh my gosh. Like if you watching the futures chart, you're not panicking, you're not shocked. You knew the QQQ was going to drop at open. That's obvious. So on options, there's probably some type of gap or something, and you're like, yo, I don't know which way it's going. I gotta do an open range breakout strategy or whatever the heck you learning and all that stuff. But like, nah, like you know exactly what's going on. We rejected the 5-minute fair value gap. We go into these 1 hour lows. Very simple. Very simple. And so, price play out. And then we get to the target, and then we can start looking to take profits. For me, I'm gonna only take profits though if we invalidate this fair value gap. That's where I want to take profits at, because I'm still gonna hold my trade based on PD rates. All right. And yeah, Elijah, that really helped me a lot when I made that change. Like I'm charting futures, but I'm trading options. So definitely look into it. But remember, make sure you have real-time data. Make sure you have real-time data. You have to pay like about $10 a month for real-time data on TradingView to have to chart futures. Okay. All right. So that was my exit right there because I didn't want to see it close over this high. Once it closed over this high, that's where I got out the trade. All right. So yeah, that's that trade. But that's me kind of showing y'all what I mean, where it's like, hourly already gives you a destination. So when you trade those lower time frames, they're not scary anymore. Like you can't be scared of the 1 minute, the 30-second, the 15-second. Like, notice what we did. Hourly target, 5-minute PD array, meaning 5-minute point of interest, basically. 30-second confirmation. So hourly, 5-minute confirmation, 30-second entry. All right. 30-second stop loss. So losses be small. Even the times when we lose, they're small losses. Even more specifically, my mentees know I would probably start scaling out if we invalidated pretty much right here. So notice where I got in. I'm getting in at a point where it's like, yo, if we bearish, we really shouldn't come back above this level. After we lost these lows, we want to keep price largely under those lows. So I don't even have to wait for price to come up here to know I'm wrong, to be honest. But I just didn't want to get that specific. But, I'm just saying anytime we do lose, it tends to be really small. So there's no reason to like panic. Just try your trade idea out. All right. So that's that. Let's delete that. Let's delete this. And let's move on to the very next demonstration because it's more coming. I just hope y'all getting something out of it so far. And I know like smart money, the strategy could feel like a lot if you're new to the strategy, but stick with it. Stick with it. Don't run from it. Definitely don't run from it. Stick with it because it's changed a lot of lives. That's like I said, changed mine for sure. So let's keep it moving and let's see what comes next. So this is FOMC day, by the way. I don't think I said that. So when price is chopping up right now, I caught a nice morning move, but price is chopping up right now. I'm not about to be messing with this. So I literally, I took a break from the charts, and then I told the premium members, told the mentees that we gonna live trade at 2:30. It's once Jerome Powell starts speaking. But the thing is, for anybody that ever trades FOMC, I do suggest you look for your trades probably after 3 o'clock Eastern, because that first half hour where he's talking is kind of like, is real iffy. There's no real moves. Usually the moves tend to happen like after 3 o'clock. All right. And yeah, there's some similarities to Wyckoff, but there's also like a lot of differences. So, but definitely. Go Gotta run this back. It's day one for me, and it feels like it. Yeah, I know it's a heck of a lot. It's a heck of a lot, but it's just stick with me. And also, by the way, I hope y'all know that I have all levels of traders in here. I got people that never took a trade in here, and I got people that be sniping with me on a daily basis. Like they know everything and everything in between that. So everybody from experienced people to beginners know that I'm trying to balance the audience. I'm trying to give a little extra explanations for the beginners, but I also got to keep it interesting for the advanced people. So just, you know, bear with me. I would say don't, for beginners especially, don't run from it. Don't run from good information. You know, run to it is my suggestion. All right. So price starts to push up here as we enter this 3 o'clock hour, and then it's consolidating. And I know there's one of the traders in my live trade. I didn't take the trade, nor did I call it out. Julian, if you in here, I think he had taken this play all by himself. Julian the sniper. So you have there's a bullish order block here. You also could just look at this fair value gap, and I want to show y'all how this play worked out for him. This is a very nice play that he took. If he in here, hopefully Julian in here, but let me show y'all. So on the 2 minute, he notices there's a bullish fair value gap in the 2 minute, and I'll show you his entry. But before I show you his entry, I'm getting ahead of myself. Before I show you his entry, dealing ranges. I just told you guys, when price is making a deeper retracement, it's very beneficial to take your Fibonacci retracement tool out and look for, valid spots to get into your trades. So what I'm gonna do is I'm gonna take it from the low, which is right here, to the high of the move, which is the top of that green wick. And I'm splitting the market up into 2 parts. So I told you guys the upper 50% is called what? Anybody in the chat, what is the upper 50% of that range called again? I just want to know if y'all paying attention. What is the upper 50% of any range that we draw called? Thank you, Carmen. Thank you, iPhone, Moji, Solid. We got premium. And then I didn't say this one last time, but the bottom 50% of that range is called discount. All right, so we're gonna write discount. I can't even type. That's sad, ain't it? Lower 50% is called a discount. So what does that mean to you? If we're bullish, great PD arrays exist in discount. So even if you trade market structure, which I told you guys, I'm not really the biggest fan of traditional market structure, but I do know places it could be very beneficial. That's why I still teach it to people, and I will be teaching that later this week, actually. So even if you trade traditional market structure will tell you, hey, we're bullish right now. And they'll tell you that because we closed over this high right here. My thing lagging, man. It's messing up my drawing. Look, this high right here is what we closed over, and we closed over this high as well. This is the external high. This is the internal high. Either way, we got a change of character to the upside. So a person may think, okay, we are bullish. And so if you're bullish, you should look for bullish PD arrays. Let's keep it simple. If market structure tells you you're bullish, look for bullish PD arrays. What's a bullish PD array? A bullish fair value gap. A bullish fair value gap. Which fair value gap do I like? I would like the one that exists in a discount. And so since I'm getting this from the 2 minute time frame, man, I don't want to scare y'all. I might scare some people out the room today. I don't know. Yo, mentees, I might scare some people. I don't know. We about to try it out. Since it's a 2 minute fair value gap, I gotta go to the 15-second chart to get my entry. People like 15-second chart. Oh, yo, get this guy out of here. Chill, just chill. Don't worry. This is what we do on a regular. So 2 minute fair value gap. There's no confirmation for your entry. Confirmation for the entry, I just told you guys, you could get confirmation through invalidation. You could get confirmation also through creation. So peep what I'm saying here. You have this purple area that you're expecting. That's a fact, David. The 15-second where the snipers is at. You have this area in price action where you're expecting price to do what? This. Like let's just think about it, right? Let me zoom back. Let me slow down because I could talk. I'm from New York, guys. So I could talk fast. Let me zoom out. Look. Let's take it easy. I got a lot of people in here. Look. you're bullish, right? Even if you trade market structure, you're bullish. Price is making a choppy retracement, which kind of shows you that that's not a real retracement because it's moving so choppy. All right, cool. You draw your dealing range, right? You're looking for entries in the lower 50% because smart money wants to buy assets at a discount, right? I just told you that's the discount area. They want to buy it at a discount and ride it to the upside. Then y'all hear, since you ever heard about stocks, they said buy low, sell high. That's simple stocks concepts, like buy low, sell high. So that's what smart money do. They want to buy the price low and they will sell it when price gets up here. All right. So with that being said, we want to buy prices at this bullish fair value gap. Now, we got this from a 2-minute time frame. And so I'm not saying you can't just enter with a stop loss under the fair value gap. I'm not saying you can't do that. But what I will tell you is we like to look for confirmations just so we can get even more confidence that we're in the correct direction. So when I go to the 15-second chart, that's the time frame we tend to confirm a 2-minute fair value gap with. But I'm gonna go ahead and write this so y'all remember. 2-minute bullish fair value gap. Just so y'all remember where we getting it from. And now you're gonna realize that's why I'm going down to the 15-second, because I'm gonna see if the 15-second could show me a change in order flow. Order flow does not mean level 2 data, does not mean anything like that. I don't do none of that. I just have naked charts. I don't use indicators. I don't use any type of like external data. You don't need any of that. I promise you don't. So when price, make sure y'all watch y'all mics. Somebody just came over. Make sure y'all watch y'all mic. Actually, for now, hold up. Let me just go ahead and make sure y'all can't even come over. You no more for real. There you go. I typically let people come off mute, but maybe just after the recording for now. Just keep it in the chat for now. All right, so nah, you're not wild at all, Elijah. You found your tribe. You in the right place. We don't use indicators neither, so let's get it. So boom, price is still bearish. So imagine you would have entered right here when it first touched it. You would have taken a loss. Like, dang, I guess I was wrong. And that's why I say we like to wait for confirmation. There is no confirmation that we're bullish on the initial touch because price never made a bullish fair value gap. It's so tempting to explain what a fair value gap is, but I just feel like class is going to be way too long if I take time to explain that right now. I just hope that y'all know what it looks like. But just know there is no bullish fair value gap right here. And so therefore there was no reason to get in the trade. So we're looking to see if price could create one. So price goes down further. Still not in the trade. But I tell you what, I do notice we just made a bearish fair value gap right there. This is a bearish fair value gap. So if we're bearish, this will work. If we're bullish, it will not work. Let's keep trading simple. So if we are bearish, this fair value gap will work. All right, so we still holding it. For fair value gaps, we like to see bodies hold it, not just wicks. Let's see. We invalidated it. Not only do we invalidate it just now, well, actually, my fault. Bodies are holding it, but I will say this though: bodies are holding it, so it still could work technically. But some deeper concepts will let you know this is not going to work out for you. I just can't explain everything in one day. But what I would tell you guys is it made a bullish one. See, so we just made a bullish fair value gap. Now you could get interested in the play. Like, yo, maybe I'll try a play out. And I'll use this bullish fair value gap as a stop loss. So imagine you got into 2 buys right here. And you could use this fair value gap as a stop loss. Maybe even put it at the swing low. It's up to you. But just notice, like, I'll probably put it at the lowest body here, me personally. I'm only risking 15 points on NASDAQ, which is very small on NASDAQ. This is the 15-second chart. Let me make this clear for y'all. So understand that these candles is not a lot of space of price action, but it's rooted in real logic. You just have to know what you're looking for. So I don't even advise these time frames unless you really get a deeper understanding of price action for real. But that's what we do here. So now you see price does what? taps into that very same fair value gap that we created. So do you see what was the point of the creation? The point of the creation was so that we could use it to go higher. So that's what I mean. Like once price starts making these fair value gaps, it's usually a pretty good sign that we're gonna actually push higher. And so now you see price getting into the previous highs, which is automatically a successful play. But if we came from a, come on, man, thing lagging, man. If we came from a discount, the goal is to not just take it to premium. The goal is to take it to buy side liquidity. So really, yes, you can technically look to take some type of profits, but in my opinion, if you're getting in a discount and price had a choppy move down, I would aim for the highs of that range. So really, getting in down here to up here is about an 100-point move. Easy 100-point move. And so shout out Julian for this play. This is a great play that he took right here. You know, by the way, I was in cash the whole time. I didn't take this play. I was cashed on a live trade. I didn't take one trade during FOMC because I didn't see anything that I was in love with. Like this play is cool, but sometimes you gotta be cool. I already made money that morning, and I was just like, I'm chilling. But this was a solid play that he took. I mean, price just goes straight to the target. All right, now you can take profits if you want, whatever. Now let's break this down even further. Let's break this down even further, my people. All right. So price gets up here, and I told people based on a concept I teach in phase 2. Now, I have 2 parts of my mentorship. I got new people in here. I got to re-explain this. I have 2 parts of my mentorship. The first part, I teach smart money concepts. Everything we talked about so far has been smart money concepts. The second part, I teach an entirely different strategy that has nothing to do with smart money, but they work beautifully together. So that second strategy tells us actually that we're not going to cross this yellow line for the rest of the day. And so I don't say things in hindsight. Anybody who's on a live trade remembers this line was here before price even got there. I'm telling you, yo, price not going to cross this line. It's not supposed to. All right? And so, and I'll give all any other questions like regarding like mentorship and stuff. I'll answer after the recording. My bad, just for time purposes. But hold on to that for surely. And so basically, they're shorting opportunities knowing that price is not going to cross this yellow line. And think about how magical that is, right? To know that price is not going above here, that's fire, right? That's a great strategy to have, I would say. And so I might be like destroying some beliefs you have headed into this class or heading into, you know, the market, where people tell you, hey, you can't predict the market, or yo, you know, price action is random. And any mentee in here would tell you price is not random. It's an algorithm. Everything is, the price action is rigged. I'm gonna be real. And I probably sound like a conspiracy theorist until you learn for a while under me. Then you say, oh, nah, yeah, yo, this is rigged. Like, that's how we're able to call these things out ahead of time. Like, you can't tell me, quote unquote, sellers stepped in at this exact moment, just at the exact spot where I said sellers just stepped in right here, because this is not a resistance level, or I don't trade support and resistance, by the way. I don't trade support and resistance. This is not a resistance level or a support level, because I know that's what y'all thinking, like, oh, price ran into resistance. No, it did not. There's nothing here. It's not about that. It has nothing to do with that. It's an algorithmic level. All right. And I appreciate y'all in the chat. They writing it in the chat, like they confirming it for me. I appreciate you, Caesar. Real talk. So just like all I say is keep your mind open. Keep your mind open to like, if think about it like this. I'm gonna say this real quick, bro. Listen to me, y'all. Most traders are unprofitable, right? We already know the stats. Like 90-something% of people fail at trading. Most people get into the market 97% and learn what? Support resistance, trend lines and chart patterns and indicators and stuff like that. But people are not doing well. And so you have to think about it like this, like, everybody's doing bad with those strategies. So then you're like, yo, maybe I should approach the market with a different ideology and kind of look at it differently. And maybe there's information we just don't know about. But if you study the market hard enough, you'll realize like, oh, it's really repetitive. and you realize that it's algorithmically driven, which makes sense, especially in this day and age that it's algorithmically driven. On top of that, it's rigged because think about it. If there's billions and trillions of dollars involved in something, there's always corruption. Let me know anything in the world that's billions and trillions of dollars are involved in that doesn't come with corruption. So yes, these markets are corrupted. It's rigged. But if you know, you know. Like, you feel what I'm saying? If you know, you know, type vibe. You know what I mean? And price is definitely factor, Elijah. You on point with that. Exactly. So, you know, I don't know every detail to the algorithm. Nobody does besides the creators of it. But I know a heck of a lot to the point where you could generate a lot of profitability on it and repeatability on it. All right. So someone said, is that a 50% fib you are using? This right here is a rectangle, and you're able to, like, watch, I'm gonna double click it. So if you double click it and you go to style, turning on and off middle line is how you see that 50%. All right. So middle line is how you could get the 50%. All right, of any rectangle you draw. I always like to see how price deals with these 50% levels, you know. And so if you see, for example, notice how the bodies are holding 50%. To me, that's a signature of the algorithm. Bodies holding 50%. All right, so let's and in fact, Will said even trading view knows that's a fact, right? And yeah, I've heard of Casper, Elijah, but I think there's a lot of stuff that when you stay with me long enough, you'll probably hear it for the first time. Because I also have my own discoveries behind smart money that I've never heard from anybody. It came from my brain. So there's a lot to learn. But let's see. So price is consolidating on this fair value gap. So for me personally, I wouldn't short the market unless price invalidates this. And so this is something I was like calling out live that day during the trade. Anybody who's in a live trade may remember this. All right, so notice that we disrespect this. Now, this is where I would get interested personally. This is where I would get interested on in price action. And because we made a bearish fair value gap right here, as we invalidated a bullish fair value gap, this is where I would base my trade on if price could hold this for real, right? Could price hold that fair value gap? And as long as it's holding that fair value gap, I'm holding my trade. Clearly, it didn't even touch it. It didn't even touch it. So I'm definitely good, right? So like I was just kind of coaching people through the trade. I was like, yeah, because it starts consolidating. Watch, I'm gonna show y'all. It starts consolidating for a little bit, and so when it was doing this, I was like, yo, don't worry. It's we already got confirmation that it's coming to these lows next. Like we already know that it's gonna approach these lows, even if it doesn't touch it. It's supposed to come down here, and then we'll use the 15 seconds to get out. All right, now. Here's the thing. The 1 minute time frame already showed us that price is going to go to this yellow line, but so does the 5 minute. The 5 minute at this moment shows us that it's going to the yellow line as well. Because if we were bullish, I know there's layers to this, right? If we were bullish, price would have used the upper half of this bullish fair value gap to make new highs. So once price came to the lower half of the bullish fair value gap, it's an if-then statement. If not upper half, then 5 minute lows. If not upper half of this bullish fair value gap, then 5 minute lows. And quick disclaimer, by the way, if you're not familiar with terminology and stuff, I still suggest you stick around to see how the strategies work. And then after that, you start attacking, okay, I need to learn what a fair value gap is. And I'll ask them a question after class for that. And but really, you know, watch the annotations on the screen, please, y'all. So, hold up. So, yeah. All right. Anyway, so you know prices come to the lows. So just keep in mind terminology. I forgot what I was saying. That threw me off. But anyways, all right. So we going to the lows. All right, but keep in mind the destination as we consolidate. So you might get nervous in consolidation, but you know where it's going. Now this happens anytime we get near a target. I go to my lower time frames off the rip. If price were bearish, like if price was gonna hit the yellow line right this second, it would have used this green candle as a continuation bearish order block to go lower. So you might, like, once again, you might not know what I mean, but just follow the strategy for now. Learn what I mean later. Stick around for this class just to see how the strategies work out. If we were going to hit the yellow line right now, this would have worked. So when this candle gets invalidated, this is where you could take profits at. So if you got in way up here and you're taking profits down here, obviously that's still a good trade. But at least you're not getting caught up in this retracement. So how many times you guys been in trades and it's going your way, and then a freaking random retracement comes and it goes so much higher than you thought? Like, you might have thought this retracement was gonna like come to like right here. Come to like right here, but instead it comes all the way up here. You're like, yo, what the heck? Like, I was in a great trade. I just messed it all up. That's because you're not paying attention to signatures. So I always tell people, like, don't marry targets, marry delivery. Bearish delivery means bearish PD arrays. Bearish PD arrays will take you to bearish targets. So if bearish PD arrays are not working, guess what? You're bullish is one of the other, like, and if you're not bullish, guess what? You're chopping, and stay out of chop. We don't trade chop. We don't trade chop. We trade trend. We trade trend. All right. So this to tell you, like, okay, big retracement coming right now. And it does. It does. Now, let me show you something. Let me show you something. Because I don't think y'all really realize that these concepts repeat over and over and over again. Over and over and over again. Let me go right here so y'all can see this clearly. When you notice we're getting this retracement, what's one thing you could do? What's one thing you could do? When you get this retracement, you could do what? Draw the dealing range. Y'all forgetting, y'all not paying attention. You go from the high to the low and do the same thing. Where did I say price is likely to reject when you're bearish? Because mind you, we did not touch the yellow line. So to me, we're still bearish until we touch the yellow line. We are still bearish until we touch the yellow line. So because I know we're bearish, I don't believe in this uptrend. Where we go? Very interesting. It looks like we going above 50% back into a premium. We just learned about premium. This is the third play in a row I'm showing y'all where premium could have got you a play. So what do we like to see in premium? Not just a simple random reach. No, there's PD arrays in premium. There is a 1 minute fair value gap here that price could use to go lower with. Understand? And so when you see this happen, you can't be shocked, right? So when price, like, yo, are you gonna tell me sellers stepped in at this exact second at this fair value? Yo, I'm trying to say it. Y'all gonna see what I mean. This market is algorithmically driven. Look how it perfectly fills out this fair value gap and drops the heck off to the target. Drops to the target. Cause we knew it was coming to yellow line. That was clear already. It was clear. But what would it use to get there? It's gonna use this bearish PD array in a premium to get you there. All right. So you want to use premium when you're bearish. You want to use discount when you're bullish. I'm gonna say that again. You want to use premium when you're bearish on the market, and you want to use discount when you're bullish on the market. All right. So that's that. That's that. In the chat, can I get ones and twos if you getting something out of today's class so far? Before I continue, in the chat, can I get ones and twos? If one is if you getting something, my fault. Two is if you like, yeah, I'm not really feeling this, brother. Switch time phrase confuses me because when I put my film in my 5 minute, I know where I'm going. All time frames work together. They work together for good. I'll elaborate on that real soon. I appreciate y'all so far though. A lot of ones in the chat. Glad y'all getting something out of it so far. I need that, and I need apple drink to keep me going. I need to know, like, I don't want it to fall on deaf ears. So let's keep it moving. I appreciate y'all for the feedback. Now I do want to point out real quick. I would just waste it. I do want to point out real quick where price stopped. So just to continue to open your mind to things, people, I told y'all before price got here, my live people that was on the live is in this chat right now. They're in this chat right now. If I'm capping, if I'm lying, they will tell you in chat, like, you ain't say that. Before price got there, I say, yo, phase 2 concepts tells us price is not supposed to cross this yellow line for the rest of the day. Look how it comes here and it stops right before it knows better. It's like price knows better. Like, nah, we not allowed to go up here. They're like, all right, we might as well go back down here. And then you see what price does, and then the market closes. And it's like 4 o'clock right here. The market closed. It knew better than to come up here. So that's what I'm trying to say. Like, that's a time concept. This is an algorithm we're trading. We're not trading buyers and sellers and news events like people try to make it seem. But if you know, you know. But if you know, you know type vibe. All right, so now let's keep this going. So in the chat, I had put out, drop of, no, not that. I put it it's in my channel right now. In my channel, I already posted about this, but when price got to this area, I already pointed out, I said price is gonna come to this gray area. So this is the play that I put out. When price got here, I said this is coming next in the market. Really quickly, the reason I did that is, guess what? You guessed it, people. From the low to the high, trusting the fair value gap and a discount. Fair value gap and discount ends up making that happen. So keep that in mind. So even through all this noise that was going on, I remained bullish on the market into this area. And as a quick side note, just because it's what's going on right now, it's in the chat right now. My mentees, I've been talking about it in class. I said what? I said, yo, I don't think NASDAQ is going to run highs. I think it's just going to address this gap real quick. And after we address this gap, I'm looking for price to drop the heck off. So right now, we see NASDAQ gap down heavy. We down like 2.5% overnight right now on Sunday. So I'm just saying, after it filled that gap, what did y'all see happen? So even on Friday, the rally, everybody was bullish Friday morning, like, oh my gosh. And I was like, yo, I'm still bearish on market because I'm looking for this play to happen. And y'all see what happened so far. So it's a lucky guess every time. It got to be a lucky guess. It's a lucky guess every time. Got to be. All right, anyway. So here we go. We looking for yellow line next. So once again, hourly already gives you a direction. Hourly already gives you a direction. And then, what was I saying? 1 p.m. hourly. Let me fast forward. I'm just trying to get to the next demonstration right quick. All right. Okay, so when price gets here, mentees, can a mentee answer this for me, please? If we want to run the yellow line, what do we want to see happen? Mentee, I just want to know, mentees, if we want to run the swing high right here, what do we want to see happen with this fair value gap? Anybody? In detail. If we want to run the yellow line, thank you, Will. Thank you, Miss Ann. But my mentees, Will and Miss Ann are my mentee, right? And they being specific, because you're right, Simone. Pull back into that fair value gap. I agree. Yep. Like Postman said, I offered the upper 50. Right. So we looking for the upper 50% to take us to the swings, the buy side liquidity, which is, once again, I'm just saying that price wants to attack these highs. Price wants to come above this red wick. Why? Because there's a pool of stop losses there. So you guys will learn more and more that price just targets stop losses. That's it. Price is just targeting stop losses. But anyway, so when price retraces, and this was during my class on Wednesday. I had a class on Wednesday. I was telling everybody, yo, I think price is going to use this inefficiency to go higher. So we were looking at this general area, and this is a play that I took advantage of trading late that night. So let me just show y'all real quick. So it's playing around at first, like, okay, like if they just go without using the purple, I'm cool with that. I'm not gonna chase it. But if they come into the purple, I'm watching like a hook, like, yo, what's up? Like, talk to me nice. All right, so price starts to come down. Now I'm weak, Keisha. Yeah, we talked about it in class, Keisha. Facts, right? We talked about price using this. We're looking at the upper half. Now, why did I not get into play right here though? Like, why did I not get faked out right there? It's a couple reasons. One, there's a huge imbalance here that I feel price wants to address. Two, we didn't get any confirmation. So on this 5 minute, I didn't see no 5 minute bullish fair value gap come out. So I'm not really pressed, you know. I only want to get in if I'm starting to see them bullish fair value gaps develop. But I already told y'all low key, like, because I am leaving out certain details. Like low key, we also need price to come down here. Like low key, price is not going to react. It's not going to be here. It's going to be down here for this specific example. But if I talk about everything that's in my brain, we'll literally be here till 3 a.m. and that'll be half of it, to be honest. So I'm just, I'm definitely leaving out some details, but I will just say, to keep it simple, when price taps into an hourly fair value gap, you want to see the 5-minute time frame make bullish fair value gap. So let me remind y'all, because I know there's new people in here. This purple area is the hourly. When you learn about fair value gaps deeper, you'll know why we said price needs to react in the upper half. Okay. So you're looking for reactions right here. What are you looking for though? You want to see price go from being bearish to being bullish, don't you? Isn't that the whole point? Okay, so notice how we're bearish into the area and we're waiting for signs to go bullish. Can I pause? I know I talk fast now. We're waiting for price to go bullish on the 5-minute time frame based on this hourly area. Okay, so why did I not go bullish right here? I want to see bullish fair value gaps on the 5-minute before I get involved. So I'm still chilling. And there's low-key more reasons, like I said, but I think that's simple enough right there. So I'm still chilling. All right. This is interesting. We're making a bullish fair value gap out of nowhere, right? Just coincidentally, when we get to about the 50% area that we were looking for, or the upper half that we were looking for, all of a sudden, bullish fair value gaps come. So let's highlight one. This is a bullish fair value gap right there. Boom. All right, so price does what? Well, first of all, this doesn't get revisited, so that's beautiful. We love that. Price revisits this one instead because it made another one. We love when it makes two. If it makes two in a row, you in the right direction most likely. Like 2 in a row, oh yeah, you probably lit. Notice what price does. Matter of fact, let's go down in the 30-second because y'all not hearing me for real. Y'all not hearing me for real. On the 30-second, you see how price taps where? Coincidentally, right at the 50%. It's just a coincidence, y'all. Right at the 50% of that bullish fair value gap. And then what does the 30-second do? The 30-second makes bullish fair value gaps. So what does that tell you about fair value gaps if you're new to them? It tells you they show you a lot about sentiment. They show you a lot about real price direction. Yeah, like Elijah said, it probably ain't no coincidence. Not at all, people. Not at all. So it's like, okay, even if you got into the trade right here, could be luck. Even if you got into the trade right here, you got to ask yourself, like, dang, where am I taking profits at? What does you base your trade on? Y'all let me know. I want to know if y'all paid attention for real. What time frame did we base this trade on? Look at y'all. What time frame did we base the trade on? Nope, not the 5-minute. 5 minutes is what we confirmed it on. Yep, thank you. Lamont, Elijah, Mary, Yogi, all y'all. Yep, everybody. Shout out y'all. Good, the hourly. So the person that said 5-minute, you're not like entirely wrong. I know what you mean. It's like what we looked for was the 5 minutes to give us signs that the play is ready. Purple. All right, let me slow down. Look. Let me go back to the hourly real quick. Discount hourly fair value gap is supposed to take us to hourly highs. Okay. Discount hourly fair value gap takes us to hourly highs. Okay. We're almost there, but we didn't get there. So now there's a play opportunity for us because we know where it's going, right? We know it's going to the yellow line. But the thing is, like, it didn't get there yet. So let's try to, can we get a little food too? Like, can we eat too? Especially if you stay cash during FOMC. This is FOMC. That's pretty bad price action. You can see like 50 million dojis. That's nasty. But you finally got some nice looking price action. So maybe you want to take this trade. So what are your expectations? If you know it's going to the yellow line, what could you use to get there? You could use an hourly fair value gap to take you to the yellow line. Okay. Well, when you start to learn about fair value gaps, you'll learn that in this scenario, you want to see the upper half of the fair value gap hold. Okay. So when price gets into the area, you're looking for confirmations to go long, to take buys, to take calls, whatever you want to call them in your market. This applies to every market and every ticker. This is not just the NASDAQ. It's not just the QQQ. It's Microsoft. It's NVIDIA. It's Euro USD. It's gold. It's Bitcoin. This stuff applies to every market. It's bonds. Anybody who been with me for the past year, y'all seen that I'm accurately charting across all markets. I chart things from crypto, bonds, everything. It applies everywhere. This is not central to NASDAQ. I hope y'all know that. Anyways, hourly area. You see like Lo said, the biggest facts there is, like, people been with me for a minute. They've been watching this play out week after week. We do this for real. So the 5 minute is the time frame we like to look at in hourly areas. I'm gonna release a document that shows you the best confirmation time frames too. So we like to pair up the 5 minute with the hourly. So hourly area, 5 minute confirmation. See, when we got 5 minute fair value gaps, you could take the trade here. Now, I might confuse people when I say this, but I'm gonna say it anyways for the advanced people in the room. Yes, we getting confirmation on the 5 minute, meaning 5 minute is making fair value gaps. But what do we like to take entries from a 5 minute on? So you're just scaling down. 5 minute fair value gap, we like to confirm with the 30. So you could do the same thing on the 30. You could get here, you could get in here if you want to, or you could wait for the 30-second to confirm this 5 minute fair value gap. So notice on the 30, what did it do? It made a fair value gap right here. Look, y'all not hearing me, man. Look. And then what do you think price did after making a 30-second fair value gap? Look, this red candle taps into it. This is your entry. And your stop loss is based on price holding this fair value gap. Look how much points you're risking for your reward. Like, y'all not hearing me, yo. This is how you get lit risk rewards. Yo, you get in at 645 with a stop loss. Let's put it at 642, just for the culture. You're 3 points to make 645 to, man, y'all not hearing me for real. This is what, 52 points away. 3 points to make 52 points. Y'all, come on, bro. What are we talking about? Like, what are we talking about? What are we talking about for real? Like, what are we talking about for real? Like, what are we talking about for real? Come on, man. You're not hearing me. Target hit. Target hit. All of a sudden, we get to the buy side liquidity. Target hit. Like, come on. This works on everything. There's no ticker in the market that this stuff doesn't work on. Like, this works on SPY. Anything that's a ticker, it works on. And I've been proving that every single week for the past year. So yeah, that gets hit. So that's that demonstration. Then we got one more quick demonstration real quick. What is this? Thursday. I feel like I'm missing something, but it's okay. I feel like I'm missing something though. It's gonna bother me after the Zoom. I know it, because I picked the plays I want to go through with you guys, because there's a lot of gems in them, So, man, I feel like it was something in this price lag. I mean, by the way, just in general, this is an AMD setup. So, I'll show you guys real quick. Let's just show y'all like what an AMD will look like. I hope this is what I wanted to say, because I was playing in the class, yesterday and Friday. Was it on Friday? I don't know. It might have been Friday night. I was playing in this class. So it's a little blurry in my head. But look, we got accumulation. This was all happening overnight. Accumulation overnight. So what did I tell you? What's the AMD setup? Accumulation. They're gonna manipulate to one side and then distribute to the other. And so that's a setup. Now, why do we anticipate them manipulating to the upside here? Because there's London highs here. These are the highest. This is the highest point that price action got to during the London session. Futures trades overnight. So I just want to point out low key really quick again for my options people in the room. I know a lot of y'all trade options here. Price opens up right here and smack in the middle of this consolidation. So in options, you eagerly trying to trade something, but a futures person who's looking at a futures chart will say, I don't want to take any trades inside of this range, right? Those lows to these highs. I don't want to take trades in there because it's just not This is chop, right? It's consolidation. I'll take trades outside of consolidation. And so a person who was watching the futures chart, they know about this consolidation because it was going on prior to 9:30. An options trader is looking at the chart for the first time in the middle and they don't know what's going on. But that's what I'm trying to tell y'all. So price breaks to the upside with a fair value gap. We only like consolidation breaks with fair value gaps in here. We only like consolidation breaks with fair value gaps. All right, so it breaks with a fair value gap. You could have taken longs into London highs. And this is still a solid play. This is like 20 something points. And then it keeps going even farther. Sheesh. I mean, it went a lot farther. This is like a 50 something point play altogether. And then price starts to break down. And you don't have to snipe the top. But I would say this. If this fair value gap doesn't send you to new highs, we're bearish. So let me remind you, I told you guys something just now. I said, yo, when we break consolidation, we like to break it with a fair value gap. Why is that? Because this fair value gap should be high probability until we get to our target. We already got to the target. We got to London highs. Now, there's a gap above. So at the time, I definitely was looking for this gap to get hit. Personally, I wanted this gap to get hit at this moment. It didn't. Really unfortunate, really unusual. So this drop, it caught me off guard, but didn't catch me off guard. Like I seen it happen, I just didn't believe it. Because I thought price would come to this gap, then it was going to drop. But it dropped before the gap, and then it got to it on Friday instead. That's how I go, right? That's trading for you. But what I will say is this. This is the fair value gap that'll tell you if we bullish or not. And so once we trade it under it, there's definitely room to short the market here. And you could use the fair value gap right here as a stop loss. And if you want even more of a cushion, you could use the other fair value gap as a stop loss too. That's fine. In this scenario, that's okay. And then you let it all play out from there. And you see price continues to drop, pretty hard. Pretty hard. So this is what I mean by accumulation, manipulate traders one way, distribute the other way. Notice what price rejected here, a bearish fair value gap. So when it came back up, what did it reject? Bearish fair value gap. Anybody who's familiar with breakers, this is a breaker right here on the 1 minute time frame as well. So talking about more experienced SMC people, that's your breaker entry right there to go short. All right. And then the very last demonstration is this. Let's move on to Friday. Because Friday was a crazy day, wasn't it? Anybody who was in the market on Friday? Friday was nuts. I ain't gonna lie. Friday was nuts. All right, so the market opens, and what was said? Let's see. Oh, it's not there. It's gonna be probably in the Discord. I don't even want to put it up. It's already in my channel. You guys may recall from my channel. I said this is before the market. It's at 9:21 a.m. At 9:21 a.m. You see this gap right here? This gap that happened overnight, this gap up. Okay. It looks like the gap is gonna stay open. Everybody is super bullish in the daytime. Let me fast forward to 9:30 real quick for y'all. That's gonna take too long. Let's go to hourly. This is what 8 o'clock. Let's go 9. All right, boom. So check this out. Remember how a couple days before this, I was saying that price is gonna come and fill this gap out? All right, it fills the gap out. Beautiful. Now, on this day, at 9:20 a.m., so that's around here, I said I'm expecting a return today to this gap. When did this gap occur? Because I know options people are not used to this, but futures is almost a 24-hour market. There's 1 hour where it does not trade. That's between 5 p.m. and 6 p.m. So at 5 p.m., we closed right here. At 6 p.m., we gapped up right here. Futures tapped into the gap and went long. I was on live I'm talking about like my class. I was in class. I took buys to the upside right here. So I actually caught this move into the gap real quick. Because we tapped into this gap, I know we're gonna go to that gap. Anyways, the price continues. So when price is up here, everybody in the world is bullish. They're like, yo, all-time highs coming. What did I say? Today, price is gonna return to this gap. The screenshot is in the chat already. All right. So when this happens, price is bullish for now. We can let that rock. This was very unfortunate, and I didn't get to take advantage of how I wanted to. I was pressing the wrong buttons. All types of stuff was going on, and this chop also was really tough to deal with. We tried to short it. We tried to short it here, I believe, if I'm not mistaken, and then it pushed up again. And then when I tried to short it the second time, I pressed the wrong button, and I was like glitching. I was like, yo. And it was really tough because I want y'all to see what happens from here. And I was just see what happens from here. Drops, price dies. But look, this target right here is from phase 2 as well. Once again, I told you, I don't just trade SMC. I trade something else. This is a phase 2 target. And so my phase 2 members was able to see how beautiful that is. On my phase 2 members, y'all seen how it hit the target, and that was the high of the day. It's so gorgeous. Like, it's so gorgeous. I love it. And for people who do trade SMC, if you look to the left, like, you could say, oh, price tapped into this hourly fair value gap, and I just think that that's like getting lucky, because to me that's not repeatable. That's not repeatable. To me, this drop happened because of the phase 2 concept more than it is this fair value gap, because to me this fair value gap is out of context. This wouldn't work on another play. This is a probability type thing. Like, yes, today it rejected here, but if I had this exact same chart set up on another day, I would target the highs. So I just think that SMC traders, if they shorted that, they might have gotten lucky. But you need a little more to SMC to know that this would be the high right there. But anyways, yeah, so this is unfortunate. You know, price ends up dropping, and guess what? It fills in the gap right here. All right, fills in the gap, and then the market like pretty much consolidates around that area and then closes. And then you see what's going on today. And then it closes. And when price is right here, I put it in my was that phase 2, people? I think I put it in phase 2 chat. I said price just bottomed out for the day. So all that stuff is on document. Like, how could I know that this is the bottom? I'm using concepts for that. And it has to do with hourly candles. That's what all I'll say. So I knew this was the bottom, and it consolidated, and that was it. And so I'm doing this also to like expose people to I'm trying to like kill things that you may believe before that's just not true. Like, price is predictable, it's algorithmically driven. These rejections on the tick and everything I'm talking about is not a coincidence. It's not like it can be coincidence every time. I'm doing this all week. I just outlined an entire week for you just now, by the way. All these things are said before it happens, not after it happens, before it happens. So how could a person be saying this before it happens? This is not hindsight stuff. So it's like, yeah, nah, this market is predictable. And so, you know, we just dropped out the sky just now, and we're gonna see what happens going forward. We're obviously still in this range. This range is an insane range right now that we dealing with on NAS. But we about to talk about that. So let's get to the next segment of class. I know it's a lot, but like, this segment is a lot quicker. I know, right? I'm giving a lot of source to the post-mod, to the non-mentees, but you know, that's how we do it. The free community should be paid, but it's not, and it's never gonna be. The free community gonna always be free. So yeah, we're gonna talk about all of this for surely. What was I about to say? Really quickly, brief intermission for the order blocks quiz. All right, so these are the stats for the order block quiz that I gave. This is the free community stats. The free community, the average score was a 20 out of 45. Definitely wasn't looking, you know, too good on the free side. Not gonna lie, I think a lot of people may have, they maybe thought they understood order blocks, but there's a lot to learn. And that's why I'm gonna be giving a masterclass for order blocks, everybody. I'm gonna be giving a masterclass for it coming up next week. I know I told you guys to choose between Tuesday and Saturday, but it was a split decision. Like, last time I checked, it was 29 to 29. So what I decided to do, I'm just gonna do both days. So Tuesday, I'm gonna run the order blocks masterclass. Next Tuesday, February 11th, I think, and February 15th on Saturday, I'm also gonna run it. So you guys get what you want. You can come on Tuesday or you can come on Saturday. I'm gonna run it twice, and so I'll be putting signups out for that and everything in the channel. I'm gonna have somebody make that on the back end, and then I'm gonna keep y'all updated on that, because I do want you guys to understand these order blocks. But just to show you guys the difference, this is a group that's never heard me teach order blocks before, right? The average score is a 20, and then I gave the exact same quiz to my mentees, and the average score is a 35 out of 45. So, and you can see that the highest amount of people, meaning 8 people out of the 29, got a 39 out of 45. Each question counts for 3 points, so they got 2 wrong. So out of 15, basically most people got a 13 out of 15, and then I had 4 people get a perfect score. Right? So, but you can see like the range is different. Like, so this is people that's heard me teach order blocks. They know what's happening. So if you are basically like watching this on YouTube or whatever, this is like a quick skim of like what the quiz would look like. I'm saying which one's gonna happen. So for a person to look at a chart and just know that, okay, we should be going up, or no, we should be going down. Yeah, that's a skill that they learn. You should know where price is going at all times. Hence why, like I said, price is predictable. There's a science to it. All right, it's a science to it. It's not. They should know which one is expected. Arrow 1, arrow 2, or arrow 3. Yeah, it's not random. So I just don't want y'all to ever think that this stuff is like random, because it's not. And if it was random, then my mentee scores would be all over the place. I wouldn't have so many perfect scores. I wouldn't have so many people getting just 2 wrong out of 15. 15 charts like this, and they got 13 of them correct. Just think about that. And they got all 15 correct. Like, it's clearly a science to it. So don't ever think that it's just like, just a guessing game. So that's a quick intermission just to talk about that. But I'll keep y'all updated on the what was I saying? The order blocks masterclass coming. Right. And True says she used to hate OBs, but until the mentorship, facts. Now you see, like, we approach them different than probably how you ever been taught. It was funny, like, if you don't mind me saying, True, like, True told me, like, in our one-on-one one before she's a mentee, because I do like to vet people before they enter the mentorship. Like, she was telling me, like, yeah, she was learning order blocks before, she's heard of them before, and she tried to trade them from hearing it from other people, YouTube and all that stuff. But then, like, yeah, now that she went through my mentorship, I teach it different. So that's just like, and you see she had a lot of success with it. Last order blocks quiz, True, you got 100 actually. Last order blocks quiz, you got 100 on that. So that's just to say, like, once again, I teach things different than a lot of people. So even if you've heard of order blocks, 1, your quiz score maybe is a little representative of what you could use a little brushing up on it. And 2, just hear me out. I might say some things about order blocks you've never heard before. That's what I've noticed with people I've taught. So that's just a quick side note. Now let's get into the last part of class. We probably be done within 20 minutes. All right. So this is the part of class where we talk about what's going to happen in the market going forward. And what we like to do is we go to the economic news calendar to tell us the best days to trade. I call it the weather report. It's the weather report, because just like if you was planning a party or something like that, you're going to look at the weather to find out, hey, what's the best days to plan this event? So if you're planning to trade, you want to know the best days to trade. And typically that's around news events. That's when you get trending price action. So we want to look for, where is the trend going to occur? Monday is PMI, ISM. You watch out for those at 9:45 and 10. Tuesday is largely uneventful. Oh, I thought I saw Jerome Powell. I was like, what? But no, Jerome Powell's not speaking. Yeah, so Tuesday is uneventful. Wednesday, nothing really to talk about like that. Thursday is irrelevant largely. And then Friday is unemployment day. So Friday is what everybody's waiting on. Big day on Friday. Major day on Friday. So you want to keep your eyes on this right there. And so keep that in mind. Monday, I expect trend. I expect trending price action on Monday. Tuesday, Wednesday, Thursday, maybe some potential chop in the market, real back and forth vibe. But Friday, I expect something major to happen, low key. So we about to find out. So let's go ahead and look at these actual tickets. So once again, this is the part of class where I go through different markets. So I'm gonna take it to Forex people first. So Forex, I'll show you guys what I think may occur in the market going forward. So let's start with the dollar. Let me just say on the dollar right now, we call it before it happens here. Simply put, You could go on my channel right now in the Discord, and it's lagging, man. Hurry up, bro. Hold on. Because my drawings is not pulling up, but I know it's just lagging. Come on, man. I just need 20 more minutes, bro. My drawings will pop up any second. There we go. Okay. All right. So you can go to Discord right now. And what did I tell everybody? I said this fair value gap from the weekly chart is make or break for the dollar. I said I'm expecting us to use this fair value gap to go higher. This is before tariffs from Trump came out and whatever other justification you're going to talk about. This is exactly where price is supposed to bounce from to run these highs. And so you see it playing out today. The market opens and it blasts to the upside. Is it a coincidence every time? It can't be. It can't be. So again, this fair value gap is what's expected to you because it's very high probability. And I told y'all, this is the only thing I need to see for bullishness. And for bearishness, if we invalidated this, then I will become bearish on the market. But because we used it, I remain bullish on the dollar. And so if the dollar is bullish and we aiming for bullish targets, I told you guys a long time ago, I'm expecting the dollar to come to these highs. And so notice that if I have a bullish draw, meaning a bullish bias on the monthly chart, all of a sudden, guess what's high probability? If the monthly tells me we should be going higher, you can see why on the weekly chart, I'm looking at weekly bullish fair value gaps because they're going to support that monthly bias. So I'm expecting bullish PD arrays like fair value gaps to hold as we approach this yellow line potentially. And so it gives me a direction. Like going forward, I trust bullish PD arrays. So let's say this ends up being a fair value gap, one day or something like that. I don't know. And price goes up and it starts to come back. Am I panicking? No. Somebody's requesting something. No, I don't know what y'all requesting. Please just chill in the chat. So look, I'm expecting price to come in here to go higher. Right? That's the goal. That's what I'm expecting. It's because why the monthly told me to stay bullish. That's the point I'm trying to give you guys. All right. So, anyways, DXY playing the heck out. Yeah, I know I remain bullish. Target these highs for now, which looks kind of obvious, but we'll see. We should be able to run these highs. That was the goal. So this play is playing the heck out on DXY. Let's go to Euro. Look at the gap down. You already know what's up. So, I told you I chart this stuff Friday and Saturday, right? Today is Sunday. So when I charted it, I had this BISI here from the 4 hour, and my plan was to tell you guys that I lean bearish, but I'm not going to go bearish until price invalidates this 4 hour bullish fair value gap. So new people, you see the word BISI. A BISI is a bullish fair value gap. Synonymous, they are synonymous. A BISI is a bullish fair value gap. So if we were bullish, this would have happened if we were bullish. So for me, I was leaning bearish, but I was going to tell you guys I wouldn't go short until price invalidates this. So now that price clearly invalidated it, yes, I remain bearish on Euro USD. And I expect it to run these lows, etc., etc. All right, so Euro, all dollar pairs, you could already kind of tell where we're going to be leaning. And here comes British pound. So another concept I talk about is price rejecting the highest body at any given swing point. Look how price came to the highest body at this swing point, rejected it, came down, invalidated the bullish fair value gap. Beautiful. So we're getting confirmation through invalidation. I would target these lows going forward. I'm looking for British pound to remain bearish in that direction. Let me say something real quick about that too. See the gap that we just made. I don't want to see price invalidate that gap. So I want to see price, like, especially if we could keep that gap right there and we don't close it up today. Like if it looks like this going forward, I would want to see this gap respected until we hit those lows. That's a side note. New Zealand dollar. What do we say about this weekly fair value gap? We want to see price hold the lower half of this weekly fair value gap if we want to hit this yellow line. Y'all see what's going on? We gap down today. It can't be a coincidence every time. All this stuff is said before news events come out. All this stuff is said before it gets there. It's nothing is said after the fact. Just so y'all know. So yeah, we looking for this yellow really both yellows because those are both, let me see. Yeah, you see these relatively equal lows? We're gonna run out the bottom yellow line. So, and one reason I believe that highly is because see how the low on the right is higher than the low on the left. That's a good sign that this is a good liquidity pool for price to target. And so real quick, what do y'all learn in retail? You guys learn in retail that this should be a support level, right? So let's see how price deals with this going forward. Because in smart money, we be targeting those lows, especially if we're looking at bearish order flow holding. Notice how we using bearish fair value gaps when we're bearish. Yeah, so I definitely am looking for price to destroy that quote unquote support level. All right. Oh, somebody said, what are those yellow lines? So if you look on the weekly chart right here, it's just me looking at this, what used to be a, somebody would see as a support level. I just know because price bounced here like that, there's a lot of orders, institutional orders existed in this area. That's where a lot of stop losses is at. And so price will target that as a sell side. We call it a sell side pool of liquidity. So looking at the order flow right now, I got you right now. Good question, Yogi. You can see that the order flow is super bearish. And then guess what? We retraced into what? A bearish fair value gap, rejected it. And so I like that as a bearish signature. The fact that we rejected the lower half, that tells me, yeah, we're most likely going to end up running out these yellows. SIBI is a bearish fair value gap, okay? And after the recording, if you've never heard of a fair value gap, anybody, I'm going to explain it after the recording if you need the explanation, all right? And yes, thank you, Elijah, for that. Elijah wrote it in the chat. That's what they stand for. And I will show you on the chart and explain it even more simple after the recording is over. So just we almost done with that anyways. So yo, it's just so funny watching this play out because obviously I'm looking at this for the first time. Why is this here, y'all? Remember when price was right here, I said I'm bullish on USD CAD as long as we hold this busy. Like, come on, bro. And where was I bullish on it to? The yellow line. The yellow line. So we got to our target, and that target, by the way, is these highs right here, both of these highs. So let's look at the opposite example of what I was talking about in the previous ticker. You see how this is a lower high and this is the higher high? There's a sell side pool right here. This was where they engineered. That's why the high is lower than the previous high. So when order flow flips bullish, we will target that pool and price blast through that quote unquote resistance level. Notice that price blasted through that. And so that's why, because I know we're bullish, I trust bullish PD arrays like this bullish fair value gap. I trust this PD array to take me there. And that's why that was the analysis for the past how many weeks? Because we obviously consolidated for weeks in a row. Since early December, I've been looking at this to take us to the yellow line. And y'all watching it play out right now. There go that. USD CHF. My analysis here, when I was looking at this yesterday or whatever, I was like, I don't like any PD. I don't have a PD array that I like to take us higher, but I'm just bullish anyways. And one reason I'm bullish anyways is because the drop is so staggered. So I don't really believe in it. It has no energy behind it. So to me, it's just a retracement. But where is it retracing to? I didn't think I found a place for that. Let me see. You could call this a continuation OB on the weekly, but other than that being a continuation OB, I don't really see anything that I love as like a PD rate that it bounced into. It just just a little retracement. But as far as us taking a trade, I didn't really have anything that I would want us to use there. You guys may remember us using this bottom one. You may remember us using this one. And this was a target we had, right? This was our target. Then we retraced. But see, this retracement, I didn't have anything for us to bounce on, but it still goes up. But I stayed bullish on it because, as I told you guys, when price is up here, I think we're going to run these highs out. And guess what? I could use the same logic that I just talked about. Lower high, right? This high is lower than the high right there. So to me, that's definitely a sign that we're probably going to attack above that. And last but not least on Forex, USD/JPY. And it looks like another magic one. There you go. Looks like magic again. Weekly BISI. Look where price stopped at, right at the bottom of the weekly BISI. It's like, you can't make this up. It's like it just stops at that exact moment. Maybe it's just magic. And this is what I'm getting it from, the weekly fair value gap. So notice how price came, fell at the weekly fair value gap, and we want to see if this could continue higher right there. And so this was something we wanted to see price reject, or no, we wanted to make a decision based on this last week. We wanted to say like, all right, if we're bearish, price should reject this. It rejected it, but it still hasn't invalidated the bullish PD array. So whenever you're in between PD arrays like this, meaning we're in between something bullish and something bearish, that's a lot of times when you see consolidation in the market. So you could wait for price to either clear the purple, or you could wait for price to clear the blue. If it clears the blue, then you want to get involved. And if it clears the blue, which I anticipate that it will, I'm expecting it to attack the yellow line above at 160.386. So this is still a bullish draw for me. I'm still bullish on USD/JPY, but I would say it probably gets more clear above the blue area right there. So you want to just keep that in mind. And let's move on. One quick ticket on the bond side. Where's at? Where my ZT at? Oh, there we go. Okay, so I've been saying, man, like, you know, this thing has been consolidating. We got the order block rejection before for these lows. That was good, but ever since then, it's just been kind of consolidating. So for me right now, I don't have a bias on this. I think it's gonna push to the downside personally, but it's nothing that I'm like, you know, it's not to die for. You feel what I'm saying? I still think it's gonna push to the downside, but it's nothing really that I would say about this bond ticker right now. We got targets already, and now it's just kind of like playing around. It's still holding this area for the most part, but still, like right now, it just rejected. Right now, it just rejected this bearish fair value gap right here. It just rejected that, and you know, we'll see if it wants to go attack these lows. If it invalidates this fair value gap down here, then I would attack these lows under it. But other than that, let's look at Bitcoin now. Let's look at Bitcoin, man. Bitcoin is eventful. I ain't gonna lie, cause yo, all right. So people who's new here, let me catch y'all up, man. Let me catch y'all up. So last year, around I think it was May, I said Bitcoin. I got two targets on the upside. I got 95,760. We watched price deliver, and then I had 122,520 as a second target. We got right between the two so far, and now and then it started consolidating. So what's next on the coin? All right, NASDAQ and Bitcoin tend to move side by side, like in the sense of there's never really been a time period in history where NASDAQ is going crazy to the upside and Bitcoin is going crazy to the downside. Like they're usually, for the most part, generally correlated. I told you guys since August of 2024. My bad. On the NASDAQ, let me go to NASDAQ real quick. Let's go to NASDAQ. Come on, NAS world. Let's go to NASDAQ real quick. Not necessarily via SMC. I would do an SMC with Ethereum, which I'll actually show you that too. But so on the NASDAQ, I told you guys on election day, matter of fact, because y'all don't hear me for real. Y'all don't hear me for real on NAS. Let's check this out. This is in the chat right now. So this is election, the morning after election, something like that, whatever it is. Oh yeah, this is the morning after election. Y'all might remember when Trump got elected, the price went crazy to the upside. Like everybody was like, oh my gosh, crazy bull market coming, like Trump is in or whatever. And this is what I said. I said, everyone thinks the market is gonna rally super hard in the intermediate term, but I think the top is either put in already or is coming very soon. Anytime everybody's on one side, especially people who don't even follow markets, like y'all friends or your cousins at dinner, like, yo, bull market, right? Like, all right, man. It's best to take the other side, right? When everybody's bullish, you probably should be bearish. When everybody bearish, you probably should get bullish. Because remember, that's how smart money works. If everybody on one side, who's making money? If everybody on one side, who's making money? All right, anyways. So what I said, in the super short term, we may still be bullish, but I don't think it's going to last that much longer. So this is in November, but really, anybody who's really been with me before, since price was in this area, I said, I think we're going to be bearish, but if we push up, I think we have one more rally in us. That's been my analysis. This is that rally. Okay, cool. And election was right here. Same thing. Okay, cool. Pushed up one last time. And ever since then, and just to catch people up real quick, also, we called these highs and we called the drop down to this. When this was happening, right before FMC, before Jerome Powell spoke, I said the market's coming right here. And it stopped right there and it turned around. Just catching people up. There's new people in here. So I'm just telling you, I know like price is predictable. That's why I'm bringing this stuff up to, because I have to change people's minds. People think price is just random. It's not random. I'm not perfect, but I'm pretty accurate on predictions. That's all I'm gonna say. All right. So anywho, then price been consolidating ever since. So I think that there's still a chance that the market could drop off hard. It's still early to say. We're still in this consolidation. But my point is, because I brought this up because of Bitcoin, right? Because of Bitcoin, like if we do drop off on the NASDAQ, then I think Bitcoin is gonna follow suit. All right, so let me go back to Bitcoin real quick. Let me go back to Bitcoin real quick just to show you. I'm gonna get NASDAQ is right after Bitcoin. So you see it's consolidating, NASDAQ's consolidating. They both giving signs that we want to trade lower. I've been looking for lower since August of 2024, and we've been consolidating for a long time now. And this is potentially when it's gonna happen. Now, if we break above with fair value gaps, 122 is definitely the target. If we break below this green low, if we break below January 13th, with a fair value gap on the hourly time frame, Bitcoin is gonna have a significant drop. So you notice where my price alert is at. You see where my price alert is at, because I want to know if Bitcoin takes these lows, how is it gonna take those lows? If we just do something like this, I mean, okay. But if we take it and I'm able to draw a fair value gap right here, right? If I'm able to draw a fair value gap right there on the hourly time frame, I expect continuation. And so we will see how Bitcoin continues right now. And so someone in the chat mentioned SMT divergence. So that's when you look at two correlated tickers and look for differences intraday or even on any time frame, really. So if you look at Bitcoin, what you'll notice is Bitcoin then took its all-time highs. I think everybody knows that, so I don't even have to show it. Everybody knows Bitcoin took its all-time highs. We get way out of there. Ethereum, no. Ethereum's trash. They fell off so hard. Ethereum, where it's at, never took its. Did we take it all-time high? No, we didn't. Right, we never took all-time highs. It was over here. So see, Ethereum never ran the highs from 2021. So that was a divergence, because Bitcoin, as we saw, once again, Bitcoin did this. Bitcoin is doing this. Ethereum is doing this down here. So that'd be the difference. And so that's a divergence right there. And that's something to pay attention to. So if we start to get energy to the downside, you know what's coming. And you see this, oh my gosh, yo, Mentees, this right here is gorgeous. This Mentees, this look good, don't it? Oh my gosh. Ethereum got some potential real downside. It got some real downside. And I'm not drawing a trend line so we could bounce on it. I'm drawing a trend line because I'm expecting us to travel to destroy that. So once again, we take the opposite side of what retail tends to do. Retail looks for trend lines. We look to destroy trend lines. And yeah, I don't have to talk about any other tickers. Low-key, I wanted to say this though. Two things. Solana swept all-time highs, coming down hard. Very interesting, especially with all this trend line liquidity. And last but not least, XRP. Oh wow, I'm weak. True. We on the same page. True. Look, so you guys may remember when price got right here. I said I'm expecting price to come back to this daily fair value gap. And as long as XRP holds this daily fair value gap, we will go to all-time highs. We consolidated forever, and then XRP ran to all-time highs. And everybody was so hyped, right? And everybody's texting, yo, y'all got XRP? Yo, you know how many people hit me? Yo, how much XRP you got, bro? Da-da-da. I'm like, yeah, man, I love XRP. It's a great ticker, whatever. I've been talking about XRP since 2020. All right, cool. Now, we get there. What I have on my chart next, I'm looking at bullish PD rates after a target is hit, always. So there's a bullish fair value gap after this target is hit. We tried to use it. We tried to use it again. And now we just invalidated it this weekend. That's not a good sign for the bullish people in the building. I'm not telling you, yo, sell your XRP, get out. We could still use a little more confirmation on NASDAQ as well as Bitcoin, but I will just say we swept all-time highs and invalidated the nearest bullish fair value gap on the daily chart. I don't like that for bullish people on XRP. That's all I'm gonna tell y'all. So, things are looking very, very shaky across all these markets. Now let's go ahead and get to NASDAQ now. All right, so NASDAQ, I said this last week when this happened, and you guys may recall this now and see how it played out. So this is what I love about these Sunday classes. We get to see how price opens up right before class. When price opened up here, what did I say, everybody? When price opened up, because everybody heard about this drop on Sunday night, Monday morning. Everybody heard about that. When price opened up and it dropped right away, what did I say? We could see how it go, but I don't like the fact that price opened up and dropped immediately. That's always suspect when price opens up and just drops. There is no move to the upside first before the drop. And so it's, to me, when I see that, that's what I'm getting at, Will. That's what I'm getting at. That it happened today as well. So when I see that, I'm like, before I really get super bearish on the market, I'm going to keep that in mind because it's very unlikely that they leave that. And what do we watch the whole week do? Slowly trend its way to the upside. And guess when they address that gap? On Friday. And once they address that gap, what did I say was going to happen after that? We're going to drop off. Everything in the chat. I said we're going to drop off after that. And you see what's happening. Now, we're dropping off. Cool. Now, same thing happened again this week. We opened up and just dropped. So I advise you not to FOMO in until we come back above the open from today. After we come back above open from today, what I would do is I would watch how price trades this gap. So there's a gap right here, right now, like this. I want to see if price could hold. If price could hold the 50% of this gap, that would be a very good sign for downside. So if we could come here and hold like this area and then come down, I would love to see that. I don't really want to see it fill in the whole gap personally. I don't want to see it fill in the whole gap. I want to see it reject around the 50% or lower, ideally, before I get super bearish on the market. Now, if it does fill in the whole gap, I wouldn't say I'm bullish, right? I would say personally, I'm thinking we're going to all-time highs on NASDAQ if we invalidate this fair value gap right here on the hourly chart. Right? If we invalidate this fair value gap, I'm bullish on NASDAQ to probably all-time highs, to be honest. But if we can hold the lower half of this, or just hold this general area, obviously in general, but ideally this, then I like us moving lower. And if we run these lows out, I think it's going to get very ugly for the stock market. Very ugly. It's potentially bear market type ugly. And I put this in my channel as well. But here's the bold prediction that I have. You see the arrow came up on a monthly time frame, right? Because I only have it visible. On TradingView, you can make certain tools visible on certain time frames. It's only visible, well, shouldn't be visible on these, but yeah, it's only visible on a monthly for real. So but yeah, that's crazy prediction. Don't hold me to it, but I ain't gonna lie, I'm telling y'all, bro, I think a bear market is very much in the works right now, but we'll see. Very bold statement to make. I don't have no money on it. I'm not at any swing trade to the downside. I'm just telling y'all that's a potential projection I have right now, but we'll see how things play out. We'll see how we address this gap. I wouldn't even think about going short unless we trade above today's open. I wouldn't even think about going short yet. And so that's that. Now, ES, same logic I just said on NASDAQ. Opened up, went straight down. Let's see how we treat this gap. I want to see price hold the lower half of that gap so we can continue lower on ES. So this is the SP 500, by the way, everybody. And so I'm expecting us to take these lows and go a lot lower. So if we can hold the lower part of that gap, I like this low as a target this week. And then these lows as a continuation target. And let's go to YM, which is the Dow Jones. Dow Jones target hit, right? Target hit. What was the Dow Jones analysis? Everybody, y'all may remember. When price is right here, I said, what are we gonna do? I said we're gonna go aggressively to all-time highs. What it did? Came down, tapped into the fair value gap on the retracement, ran all-time highs. It's a sweep. Now we drop off hard. Beautiful. I love to see this. I love to see this. Mentees, y'all should be excited to see what happened on Friday into today. That's a really good sign. So once again, same logic on the gap. I want to see us hold this gap and continue lower. I'm not looking for this fair value gap to work again. I'm actually gonna not extend it. You know, I'm not expecting it to work again. That's a one-time thing. That's supposed to get us to all-time highs. Now that we hit the target, this is irrelevant. This is what we call mitigated. It's already used. It did its job already. So now I'm looking for it to go lower, and I'm looking at the Dow Jones to attack these lows. I'm not interested in this bullish fair value gap. I don't think this fair value gap is going to work because I'm not looking for price to come back to a discount right now. I'm not looking for that discount reaction. I'm looking to trade through that and attack sell side. Reasoning is, if we were bullish, we already made a discount retrace. Super deep discount, right? Super deep discount. We need to take off. Any retracement should be in a premium. To come back to a discount, it just doesn't make much sense to do that. So if we come back here, I'm expecting us to trade past it and continue lower. And I know I'm talking faster now. I'm just trying to close up class. I got like a few more tickets and we done. Russell, everything's been dependent on this bearish fair value gap. I guess we held it still. You know, this was the initial place we wanted to see it rejected. We got the rejection, but it came back up, and I guess we rejected it again. What do you want me to say? We rejected it twice. It consolidated, and now we rejected it. So now I'm looking for continuation to the downside. Same logic on that gap, though. Same logic on that gap. And let's go with gold. Man, this was one of my cleanest analysis that I had. I wish y'all was here for that, anybody who's new, because gold never been this high before, and you'll notice that we're able to predict price at all-time highs too. So when price was down here, I said price would come to the yellow and reject. When price was down here, it's never been here before, okay? So yes, you can predict price at all-time highs. I'm trying to prove something to y'all today. I'm trying to prove to you guys, like, what you learned before, there's a lot that you don't know. So price go to all-time high target, beautiful. We talked about this rejection as well, came down. And when price is around here, I said we're going back to all-time highs. When price is right here, I said we're going back to all-time highs, and you see what happened next. Even when it came back down, right? Because it looked like I was right at first. I was like, oh, am I about to be wrong? I was like, I stayed 10 toes. So we going back to all-time highs. Why is that? Why did I know we were going back to all-time highs on gold? Because if we were truly bearish on gold, right? If we were truly bearish on gold, you know the initial drop we had? There would be no need for gold to come back up here in the first place to drop off. Not without running this consolidation first. So a little bit of deeper understandings there, but it had to do with objectives being met. But I'm gonna go on a tangent if I stay here with that. So let me just chill. What I want to watch is, right, we just must be lucky in here every week. What I want to watch on gold is, I'm bullish on gold as long as we stay above this red candle from, come on, man. My thing lagging. I think Monday, January 27th. This red candle right here. I'm trying to draw, but my thing is just lagging. I literally have 2 more minutes of class. Like, don't play with me right now. I just want to finish. All right, so I want to see how price can do it. If we invalidate this, I like gold making a strong move to the downside. And it's going to be really ugly too. Like, I think it's going to be a very aggressive move to the downside if we invalidate that. I think gold has some potential really nice price action coming. So what do I truly think is going to happen? I think that's going to happen. What I just drew is what I think is going to happen. I can't confirm it though unless we lose this red candle. Once we lose red candle, I like it. But I think that's going to happen. I think it's CL, SPY, and QQQ, and we done. So CL, man, I told you guys I'm bearish on CL. I'm bearish on CL into these lows. And it's crazy because like, I think oil is supposed to be bullish via the news. I think via the news is supposed to be bullish, but I'm bearish on oil because of the charts right now. until further notice. So we'll see. I know we gapped up today, but you see we're starting to trade back down. So I remain bear. I told you guys that, and my reasoning is because people who've been with me knows that when gold was here, I called it to the yellow line. When it was down here, I called it to the yellow line. We got there. Now, what did I say? I'm bullish on oil as long as we hold this green candle. Once we invalidate the green candle, it's an if-then statement. Now I'm bearish on oil into these lows. So CL has a move into these lows, in my opinion. We'll see. The news is telling us it's supposed to go higher. I feel like it's going to go lower. Let's see how it play out. If I'm wrong, I'm wrong. I just don't think I'm going to be. This is from my knowledge. I don't really want to speak on it. Y'all know we've been looking at price rejecting this SIBI for the longest, literally since August. Since August, I've been calling price to reject this SIBI. We've been here. So I want to see how this goes this week on the Nikkei. But all right, let's go to QQQ. So yeah, we addressed in this gap. We just in this consolidation, to be honest. I spoke about it last class, so maybe go back in the recording and watch that, where I talked about what the last bear market started like versus what the last bull market, what the last bear market started like versus present day action. It looked very similar to this, the last bear market. So I advise that you go back in your charts and look at that. And so, yeah, it's gonna be interesting. Like, I don't really have much to say. You already heard what I said about NASDAQ. I'm expecting lower. So unless something crazy happens overnight, we're probably gonna gap down on QQQ and just hold the gap. Look at when price opens up with a gap. Look if we could hold the halfway point of that gap to continue lower. Then I would attack these lows on QQQ, the lows from January 13th. And honestly, like, I'm just being real with y'all. I think if we lose these lows, we're entering a bear market. So like, why even give all these targets when I think all of this is gonna get ran? All of it. I think we're gonna take this entire area. But yeah, I ain't gonna lie, like, that's just what I see happening. Was it June? Last June, I said the SPY was gonna come to 611. That's in the chat. All this stuff is in the chat. SPY was gonna come to 611. I said that in June. That was a target for SPY. We got to 610.78. We got to 610.78, man. They ain't want to give me my target. They so foul. But this was my target. This was the target I gave y'all back last June, yo. So price coming here. And so now if we drop off, you can have your dollar back, facts. If we drop off, then just never doubt the fact that this is an algorithm. That's all I can tell y'all. Because mind you, obviously these is all-time highs. The SP 500 never been here in the history of anything. So for me to quote all-time highs, 8 months ahead, a little bit interesting, right? A little bit interesting. But we'll see. Same analysis, ES, and that's all I have. So if you watch this on YouTube, definitely like the video, subscribe to the channel. Make sure you join the free community so you can join classes like these, ask questions after, join the chart debates, the chat. Everything is lit in there. It's fire. It's a great place to grow as a trader. All the links in the description give you everything about me, my Instagram. If you want to trade live with me, most days, I think we trade 3 days a week minimum, between 3 and 5 days a week. The link is in the description as well. And that being said, that is all she wrote.